Hi guys, you've tuned into Money Control. I'm Karunya Rao and with me is Manisha Gupta. Yesterday we did a discussion on how metals, gold and even crude prices are off highs, and today it's natural rubber. Largely it goes in the same direction as crude oil prices. So is it a reaction to that, or there are more factors at play?
So the major reaction clearly comes in from crude oil prices, as you said, and we are trading at a 1 month low. The last couple of weeks haven't been so great for the bulls in case of rubber. We have seen constant declines to the tune of nearly 6% on the weaker side. But apart from crude, it also is about weak demand from China. Remember, when you talk commodities, you talk China. Not too far away. So when you look at the vehicle sales and the tire demand from China, that has been declining. It is a good news clearly for the rubber manufacturers, rather the tire manufacturers, because for the longest time they have been staring at higher rubber prices. But with the 1 month low in rubber right now, and the fact that the wintering is over and you are looking at higher supplies as we move ahead from here. So most of the rubber producing countries, whether it's Thailand or Malaysia, are looking at coming back to full swing in sense of rubber production. So this is that peak time when you see rubber coming into the markets. So well, yes, with arrivals comes the fact that you will be looking at further lower prices on this one.
But around monsoons, especially in India, a lot of these Kerala areas, they get flooded or they have excess rainfall, if not flooding. And then again, there is some pricing, volatility
disparity, yes.
that we look at. So should we expect that again this time around, maybe in the next one month, maybe some stability in prices, but after that there could again be some surge?
Oh, absolutely, yes. And this time around, if we hear the IMD right, they're saying it's going to be a normal monsoon and it is going to be a monsoon that's coming in before the usual 1st June.
Okay.
So the pre-monsoon showers will even start even before that. So yes, the Indian markets could be at a slight disparity to what the international markets could be doing. But at this point in time, as we speak right now, the next 2 or 3 weeks are expected to be better in sense of supplies, and that could keep the rubber prices under pressure. Going forward, as you see the Chinese demand come up, the vehicle sales get sustaining, and you also look at the monsoon season hit not just India but the other parts of Asia as well. Well, yes, you could be looking at higher rubber prices.
And perhaps investors can look at these tire stocks because domestic demand is now recovering, especially in the replacement segment with the educational institutions, offices, all of them going back to business. So perhaps good time to look at tire stocks.
Oh, well, absolutely. And India imports a lot of rubber as well, and that is because our own domestic production is not enough for consumption. So a lot of dependability on the international markets also is there. And interestingly, the Association of Natural Rubber Association also has revised its global production and consumption numbers. So the production has been increased by 1%, but the consumption has been revised upward by 2.5%.
Okay.
So you are looking at 14.1 million tons of rubber production, but 14.35 million tons of consumption. So in any case, those figures are pointing towards higher prices.
And domestic demand looks like it's intact, whether China or not picks up.
And only going to get better. So yes.
Okay, so rubber stocks, or rather tire stocks, definitely in focus with rubber prices at a 1 month low, and it could actually be stable for the next couple of weeks as well. So let's see how that plays out. For now, it's all that we have in today's edition. We'll be back tomorrow 1 p.m. again, so stay tuned for that.